Hey YouTube, this is Zach with Achilles Financial, and today I'm going to be talking about Walt Disney Company, and they trade on the New York Stock Exchange under the ticker symbol DIS. The reason I'm going to be talking about them is because this week on February 9th, they are going to be announcing earnings. Those earnings expectations are going to be coming in at a whopping 51 cents per share that you can see here, and they are expecting to have a pretty strong quarter based off of the Q4 earnings. So revenues are expected to be about $21.15 billion. That is up 30% from a year ago. So the percentage change in that 58 cents a share is going to be rocking in at a total of 80% higher than it was last year, Q4. And that is not super surprising based off the information that you can see here, because 2020 they had a lot of their amusement parks were closed, their cruise lines were closed, and they had a lot of trouble staying profitable last calendar year. That expectation is going to be changing as from 2022 or 2020 and 2021, they are looking to be firing on nearly all cylinders going into 2022. You can see that 2021 did have almost as much revenue as 2019. However, where we really see the pain point is in the total net income. You can see in 2019, they had total net income of $11 billion, a loss in 2020, and then in 2021, they had a profit of nearly $2 billion. So while the company still appears to be in very strong shape, they are looking to get back into those levels of profitability, which if the parks come back online, they are well poised to do because they have a huge new revenue stream in the form of Disney Plus, and they continue to do very, very well there. While growth is expected to slow, and we saw that occur with Netflix, we are still expecting that to continue to gain market share as well as continue to provide an avenue by which Disney is able to expand into by way of streaming and by way of making that a additional business line by leveraging merchandise or their amusement parks to be able to leverage that. Now, we've seen some interesting news, and I'm interested to see if this is on the TD Ameritrade website news. I'm not seeing it here, but they appear to be hiring some NFT analysts or NFT users or just a group of people who can bring the non-fungible tokens into the market for Disney. And I think that that's a huge item. It's one of the things that I highlighted when I mentioned Walt Disney as one of my companies to watch for 2022, is that they have a ton of content that they are able to deliver into the metaverse space, into the NFT market. They own a lot of huge brands by way of Marvel as well as Star Wars, and there is a huge opportunity for them in that space. Now, that being said, if you look at their price to earnings ratio, it's currently nearly 130. The company is trading at an incredibly high multiple for a company whose main source of revenue is not necessarily related to the high profitability or high profitable industries such as their streaming platform. So if you look at their overall valuation today, it is incredibly high even compared to the industry. You can see price to earnings, price to sales, and price to book are all coming in relatively low, or rather price to sales, price to book are coming in relatively low, whereas price to earnings is very, very high. However, when you look at the profitability, they are still struggling by way of net profit margin compared to where they were 3 years ago. So the question is, how are they going to be able to grow going forward? I still think that they can leverage their brands to just absolutely kill it in this marketplace. One of the things I do have concerns with is their current valuation. You can see that they have returned to those pre-pandemic levels of about $150 per share, despite the fact that the company has a lot of capabilities today that they didn't at that point in time. As such, I think buying in these 140s levels, despite the fact that they no longer pay a dividend, still showcases quite a bit of opportunity going forward as they continue to diversify into streaming, as their parks come back online, and as they enter this space, which I don't think that they currently operate in, but still should be able to dominate, or at least make a lot of money off of in the NFT space, in the metaverse space, and in the gaming space as they continue to expand. This is a company that's done very, very well to expand into new markets where they can license their functionality and just make a lot of money off merchandise. As such, I think that Walt Disney will continue to grow, and I continue to believe that they are a strong investment going into 2022. That being said, there are still macroeconomic conditions that could put downward pressure on the stock from these levels across the industry. However, we don't expect them to see as much pain as some high-flying tech names. As such, I still am going to rate them as a buy, and I'm going to still hold on to a current price target of $185 by the end of this year. Keep in mind, I am by no means a financial analyst, I'm just some guy on YouTube. But there's a lot to like about this company, and it's definitely one that I'm going to continue to follow. If you find this analysis helpful, please leave a like and subscribe. Thanks for watching. Talk to you later.